1. Buy down my rate permanently. Sorry, but date the rate, marry the house, and those temporary buy downs, well, how'd that work out for everybody who was touting those and using those over the last couple years? Those interest rates didn't come down like everybody thought, especially in 2024, where I think I remember them saying they would be in the fives. Yeah, how'd that work out for us? Number 2, I would have the seller pay all my closing costs, including permanently buying down my rate. If they aren't willing to negotiate it, again, bye, Felicia.
I've been a mortgage broker for over 21 years, and most of this is good advice, but I would not buy down the interest rate. We are in a downward trend, and it's not a straight line, but we are in a downward trend. You will never be able to buy down the rate as much as the rate can move by itself. So just hang in there. We're headed for better times. Don't buy down that rate and waste that money. Secondly, seller credits. Absolutely. Ask the seller to contribute towards your closing costs. It's all about using other people's money before we have to use your money. The worst they can say is no, but you'll never know until you ask. And if you're buying in the last quarter of the year, say from October to December, that's the best time to buy the house as a buyer, because the seller is more apt to give you a seller credit or reduce the sales price. You don't have to put 20% down. Believe it or not, you'll actually get a better interest rate because you'll still have PMI, which is a guarantee for the banks that makes your loan less risky. Less risk means a better interest rate. Once you close on that loan, then put the rest of the money down as your down payment with a recast, and that way you'll keep the rate and you'll borrow what you originally intended. And absolutely stick with your budget. That is the most important thing. Stick with your budget and you can't go wrong. Want to achieve home ownership in the next year? Follow for more home buying tips and education.